Hey everyone, welcome back to Corporate Decoder. Today, F.R.M.M just filed an 8K reporting a material definitive agreement, and I am seeing a strategic expansion into aviation assets that is quite interesting. Quick note, this is not financial advice, just my take on public filings for educational purposes. F.R.M.M Markets is buying an aircraft engine, and this could be a significant move for their business. So F.R.M.M Markets Incorporated, which you might know by its ticker F.R.M., has just announced a significant acquisition. They are buying a CFM56-7B22 aircraft engine. This might sound a little unusual for a tech company, but it looks like F.R.M.M Markets is actively building out its aviation portfolio. They acquired this engine through a newly formed, wholly owned subsidiary called Eurus Aerospace Token ILLC. The price tag for this engine was a hefty $11.65 million paid entirely in cash. This subsidiary was created specifically for this deal, and it is now the owner of the engine. This acquisition is likely part of a larger strategy to expand their aviation assets, as indicated by recent news that they plan to grow their aviation portfolio to 5 engines. Right after buying the engine, F.R.M.M Markets didn't just let it sit idle. They immediately leased it out to a major airline. This suggests they are aiming to generate revenue from these assets quickly, making this more than just a passive investment. It seems they are setting up a model where they acquire, lease, and potentially service these high-value aircraft components. Adding another layer to this deal, they've also entered into a servicing agreement. Aero Engine Solutions, Inc., the seller of the engine, will act as a servicer. They'll manage the engine on behalf of F.R.M.M Markets subsidiary during the lease period. This servicing agreement also includes options for both parties to buy the engine back or sell it at a later date, depending on its condition. This sounds like a structured financial arrangement designed to manage risk and potentially capture further value. This move into aviation assets is quite a pivot from what many might consider a technology or software focus for F.R.M.M Markets. However, looking at the external context, it seems F.R.M.M Markets has been active in expanding its aviation portfolio. News reports from mid-July mentioned the company acquiring an aircraft engine for around $12 million, directly matching the information in this filing. This indicates a consistent strategic direction rather than an isolated event. F.R.M.M Markets also issued a press release on the 16th of July to announce this acquisition and the related transactions. This is standard practice for material events like this, ensuring investors are informed. It's important to remember F.R.M.M Markets' current market position. With a market cap around $75 million and a recent stock price of about $5.68, this $11.65 million acquisition represents a significant portion of their capital. This is not a small purchase for them. It appears to be a strategic investment aimed at diversification and potentially new revenue streams. Considering their stock price has seen a wide range in the past year from under $2 to over $174, moves like this could significantly impact investor sentiment. Their common stock is traded on the Nasdaq Stock Market LLC under the ticker symbol F.R.M.M. This is a widely followed exchange, and significant corporate actions like this acquisition will be closely watched by investors and analysts. While the filing details the acquisition agreement, the actual financial statements and more detailed exhibits are filed separately. However, what is clear from this 8K is F.R.M.M Markets' deliberate effort to build a tangible asset base in the aviation sector, complementing what is likely a software or technology-driven core business. Looking at the bigger picture, this diversification strategy is worth watching. It could be a move to reduce reliance on a single business line or capitalize on opportunities in the aviation industry. The fact that they have a lease agreement already in place suggests a well-thought-out plan to monetize the asset immediately. The servicing agreement also points towards a more integrated approach to asset management rather than a simple buy and hold strategy from a Warren Buffett perspective. This looks like acquiring a productive asset with immediate cash flow generation potential, though the long-term profitability will depend heavily on the terms of the lease, the servicing fees, and the underlying demand for aircraft engines. The risk, of course, lies in the volatile nature of the aviation industry and the potential for obsolescence or high maintenance costs for such complex machinery. However, if they can successfully manage this portfolio, it could indeed be a strong addition to their business. What intrigues me the most is how this aviation segment will integrate with their existing technology operations. Will it create synergies, or will it operate as a largely separate entity? The scale of this investment also suggests it is not a fleeting experiment, but a serious commitment to expanding into this new sector. The risk I am watching is whether this diversification introduces too much complexity and capital requirements that could strain their core business. My biggest concern is how effectively they can manage these physical assets compared to their software-centric operations. What I'm actually looking for is evidence of how this new venture contributes to their overall profitability and strategic growth in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. Subscribe for more deep dives. And check out the Discord in description.